Semi stocks making a comeback this year, soaring off the December lows, nearly retracing all of its losses from the recent sell-off. Josh Lipton's in San Francisco to break it down for us. Hey, Josh.
Melissa, let's take a look at those semis using the SMH. Since the closing low on December 24th, it's now up nearly 30%. It saw it dip a bit last week, though still up about 20% year to date. Some of the names making the biggest moves since that low: Xilinx, AMD, Micron, Nvidia, and Intel. The team at Bank of America Merrill Lynch out with a new research note just today saying that fund managers cut back their allocations to semis, leaving them less exposed than their prior peak. So their betting managers flock back in. The data supports their buy ratings, they told clients, on Xilinx, Intel, Nvidia, and AMD. I also checked in with RBC's Mitch Steves. Now, he bets that the semis, excluding analog, do move higher from here. So that's memory, semi-cap equipment makers, as well as Nvidia and AMD, in part because demand could be stronger than expected in certain key end markets in the back half of the year, like the data center and smartphones, he says. Biggest risk to the group, he argues, is that a trade deal does not get done between the U.S. and China, but Steves bets that it does. Melissa, back to you.
All right, Josh. Thank you. Josh Lipton in San Francisco for us. Let's trade the semis. Dan Nathan, what do you say, especially in the week where we've got a major semiconductor deal in the books?
Well, listen, I think deals are really important when you think about the performance that we had from 2014 all the way up into the early 2017. It powered a lot of the outperformance that we saw in this group. And I think as we think about 2018, and we talked about it a lot, this group was one of the most first cyclical groups to really roll over, and it never made a new high with the broad market. And I think a big part of that had to do with the fact that there was a lot of ordering ahead of expected trade war. So here's the issue. We have inventories that are high. They're going to take a little time to back off. And like Josh just said, you know, the back half of the year could be a lot better. I would look at names like Applied Materials, AMAT, that are really beaten down. Sentiment's really poor. Expectations are really low. That might be a name into the back half of the year that should see a pickup in orders.
Yeah.
Yeah, for me, it's a no touch for a while here. I think these are the leading edge of any type of weakness in the market. Now, it doesn't mean they have to go down and retest their lows. But again, I don't think we've priced in enough of the economic weakness. We haven't priced in a hiccup in the trade talks whatsoever. And so up at these levels after this run, it just doesn't make a lot of sense for me to get long semis.
Well, you know, since we've got a technician here on the desk, Chris, why don't you head over to the plaza and break down the semis for us?
We're going to talk about this group a couple ways. And I actually think what's ironic here is as we celebrate the 10th anniversary of the bull market for the broader market, semis had a bear market last year. When you look at what the stocks did from March of 2018, and Dan's right, these things peaked early. They peaked in March of 18. They were down 27% from the highs down to the lows in December. Coming off those lows, up 30, so down 27, up 30. It leaves you right back at the old highs. We've come in about 2% from the high, so it's been a very modest pullback over the last few weeks. And if we look at the longer-term chart here, I think the big question is we are right back into those resistance levels from March of 2018. But I think the difference this time around is they've reemerged as a leader. So in what has been a sideways or a challenging tape over the last several days, we've actually seen some really good outperformance from this group. Now, this is the SOX. This is cap weighted. If we actually look at the equally weighted semiconductor index, this has already taken out those 2018 highs. So in equally weighted terms, semis actually act a lot better here. And I'm going to give you two that we like in particular. The first is the biggest in the group. This is Intel. Broke out of this big base last year. Started to turn back up here over the last several weeks. You think you get this above 55, 60. You're looking at maybe a $70 or $75 long-term chart. This is a very, very good picture. And then Nvidia, a name that was certainly beaten down here. They took 60% out of this one over the last number of months. It is now basing. We think it's turning. You start to get this above that 165 level. We think you give a run back to that 200-day moving average. So very tradable Nvidia. Intel looks good long term. I think very importantly, equally weighted, semis have already broken out above those 2018 highs.
Why don't you come back over to the desk, Chris? Be weird if we left him over there for
It would be a little odd.
Empty chair here.
Yes.
Would you rather?
Yes. Okay. Here we go.
Intel or Nvidia?
And remember, Chris drawing with his middle finger does not mean he's being impolite.
I think he changed it up today.
No, Look, it's okay. It's very effective. It gets people's attention. So Intel or, sorry,
Nvidia.
The
two.
Intel.
Okay.
And to me, this is
listening?
a combination of a couple things. First of all, just I would be leaning more towards the value. I think some of the momentum in Nvidia is certainly still needs to be proven again. I think the company's come way down in valuation, but I like the opportunities in 5G. I think data center is kind of a safe haven for these guys and a place where they continue to show they can execute and outperform the competition.
Chris, I'm curious because you said equal weight semis look good, which implies that smaller cap semis have actually done well, but you're recommending larger cap semis. And so is there a thinking that they're going to catch up? But
Sure. Actually, when you look at, for example, like the Russell 2000 semi-index, it has decisively made new highs. So the real strength here, or the real alpha over the last number of weeks, has come from the smaller ones. We like Intel longer term. I also like the yield on that one as well. I think Nvidia probably gives you the most bang for your buck in the short term. They washed this thing out down 60%. Skyworks might be one more that's washed out here, starting to turn up.
Okay.
I'm bullishly positioned in Intel for a lot of the reasons that Tim just said, and I thought expectations got pretty low there. I think Nvidia sets up as a really interesting trade, though, just from a sentiment standpoint. We know how positive it was last year. We know how quickly it turned. I think this base and that gap from January, November, there's a couple of gaps there, fill up to the 200 level on the slightest bit of good news. I mean, it just looks that way, and I'd be very surprised with expectations where they are right now that there is a considerable gap to the downside based on...
There's no skepticism in your view surrounding the Mellanox deal?
Well, I mean, listen, the street liked it. We're not going to know the synergies. We're not going to know all that stuff for months and months and months. So here's the thing. If this company feels that confident to make that size of a deal, they put up a beat and raise when they report after expectations have come down 2 quarters in a row. That stock's going to 180, 185, maybe 190.
And I think the big turn here was when Apple came out and warned earlier this year. Apple was telling you what the semis were telling you 12 months prior. Remember, all these stocks peaked in March, April of 2018. A lot of bad news has already been discounted in these. I think Nvidia, I think Intel, I think Skyworks, they're longs here.
Yeah, look, I think the presumption is that there are few catalysts to get us through this well-documented resistance on semis because of the world we live in and the trade war. But the reality is that I do agree. I think people have zero expectation that semis could pick up the boat. And think about how these companies really are tethered to enterprise spend, et cetera. I think some of that has to pick back up. Companies should have been cautious on that. And I think they could change their tune. Not overnight, but I don't see the upside that capped.
Yeah, for me, Nvidia's got the best upside here. I mean, Intel, I'm a buyer at $50 or so, see if it comes back, just because it's had a bit of a run. But Nvidia, to me, has the potential for just a bigger pop. To Dan's point, sentiment's terrible on it. It's traded sideways. You could have a big breakout. There's a gap. There's multiple different things that you could look at that would pull in multiple different types of traders. So I'd much rather be in that one.
All right,
that's how we play the game, right? Rather? We
yes.
would.
Oh, thank you for getting back to that.
Following the rules.